Hey, what's going on YouTube, and welcome to the 1-year review of casual cryptocurrency mining and is it worth it in 2018. Now last year at this time I made a video that goes through a number of things. Let me actually pull it up here. I kind of broke down like how I got into cryptocurrency, and just being a standard gamer, just thought I would give it a try and see where things went. And in that process found that there are a lot of useful things you can use with Bitcoin. And I bought some, I show examples of buying GPUs and gaming controllers with Bitcoin directly on Newegg and Purse.io. The key to the key and strategy to my 0% financial risk was pretty simple, is you don't invest any money out of pocket, so to speak. So when I started using my GPUs, and at that time we were in a bull market, meaning the price and every demand was going up. So with those profits, I then reinvested those profits into more GPUs, and then also showed how I use BitPay to pay my electrical bill in full every month. So my strategy was you pay off your electrical bill in full every month, not just, on paper, like actually pay it. So I convert Bitcoin to cash to pay my bills. And then whatever's left over I could save or splurge on, more GPUs or whatever I wanted to. So, and at that time, it was very easy to do. And I thought, anybody can go ahead and do this. So and that's what I made this previous video for. It's amazing what 1 year difference can make, because my strategy is officially at a crossroads. And to be honest, it's actually lasted far longer than I thought it would ever do. But it's amazing what 1 year will do, and we're actually in a bullish market, or a bearish market right now, where everything is on the downtrend. Now there are two major factors as far as why my strategy doesn't work anymore. The strategy of paying electric bill 100% in full and then save whatever's left over. Number one, obviously, is the price of Bitcoin. The higher the price, the less Bitcoin you spend. So, and I never really cared about the price per se. It was more like, okay, if I spend 0.3 Bitcoin, how long is it going to take me to acquire that amount of Bitcoin to, replace it, essentially? So that's how I would decide on if I wanted to buy another GPU. Like, for example, the Titan V, which is a $3,000 card. A few months earlier, I purchased a GTX 1080 Ti, that's actually in this video, this previous video, for like 0.33 something Bitcoin. By December, I bought the $3,000, and that was worth around, I think it was $800 or $700 or $800. Well, then December, I bought a $3,000 card for like 0.17 Bitcoin, so very small amount of Bitcoin, relatively speaking. So the higher the price is, the less amount of Bitcoin you have to pay. So that was one factor. The other factor is the difficulty, because the higher the difficulty, the less amount of Bitcoin you're going to get. And more than likely, it's because there are more people joining the pools, and the more people are in the pools, the more you have to divide it up. And so that's an ideal situation would be where the difficulty is really low, so you get a lot of Bitcoin, and with the value high, so that when you do cash out any of it, you don't have to spend as much a Bitcoin. But over the past several months, it's the worst case scenario, where the price has gone down, so the value is lower, and the difficulty is skyrocketing regardless of the lower price. So now you get less amount of Bitcoin, and the value is lower. So if you do spend it, you're gonna have to spend more quantity, just because the value isn't as high as it once was. So in just taking Bitcoin alone, for example, I thought this was kind of interesting. because I'm right now I average around 20 terahash, but you can see that back last time this year, there was 408 petahash with 24,659 workers, and I was getting 77,000 satoshis per block, essentially, between 77 and 78,000. Now, if we compare that to a real time, and this was also, let's see. Here, I think this is with 4. See, I check it on here. Let's see, so $3.57. All right, so yeah, so the 77,000 essentially was worth $3.57 per block back then when I was doing this. Now, when we look real time, we're up to 5,431 petahash. 211,600 workers, and you can see I'm getting 4,000 satoshis per block, which is roughly 25 cents. So you can see that with the difficulty going up, I mean, look at this difficulty. Boom, that's a huge number. And like I say, you can see that to get 0.025, it's estimating that's going to take a month, whereas on the previous one, before it was, look at that, 0.11 Bitcoin, and 5 days and 23 hours. Estimated daily reward 0.018. Now there's 2 more zeros in front of that. So, and this is the same for the GPU mining as well. If you look at the coin market cap, Bitcoin dominance is surpassed 50%. Let's refresh it, see where we're at right now. It's at 54.5%. So at one point the market cap was at 800 plus billion, and now it's under 200 billion. And of the 1,833 cryptocurrencies out there, the Bitcoin market cap makes up 54.5%. Now, I've always been bullish on Bitcoin because that's the only one that I felt was truly decentralized, and the fact that I'm able to use it for everything that I need, I've kind of stuck with that, and it's tested, tried and true. For longest duration. I mean, yes, it has scalability issues at times, but overall, that was the only one that I really felt investing in. As far as with all my GPU mining, I would convert everything, whatever other altcoins, into Bitcoin. So I've been, I guess you could say a Bitcoin maximalist this whole year. So everything I've done is with Bitcoin, but as you can see, I mean, Ethereum was at 1,200, I know, at some point. Now it's under, it's $259. So there's the dilemma that I'm in now is that I am teetering on a day-to-day basis between break even and at a loss. So whereas before, within 5 to 7 days, I would make up my total electric cost for the month, and everything else that I mined the rest of that month would be 100% profit. Well, now it takes a whole month just to make to cover my electrical expenses. So let's say if I make 0.15 Bitcoin, we'll say I have to cash out all of it to cover my electrical expense, and I have little or none left to save. And in some cases, there's not enough to cover electrical in full at all. So I actually have some of my GPUs off, or only doing part-time mining to kind of subsidize those electrical costs. So where my original plan was to just pay everything off and save, that's kind of coming to an end right now. So now the question is, I can either stop mining or pay the electrical, and I mean, there's no point of cashing out all my crypto and still having to pay. So what I would do, what I'll probably do for the next few months, if the bear market is still the way it is I'll just eat the electrical costs as long as it's not more than, say, $100 to $150 extra per month, because I don't want to. That I'll assume that would be my investment, $100 $150 in electrical costs, and save the little bit of Bitcoin that I get during that time. But now that's not, as far as a casual miner, that's not necessarily something everyone's going to want to do. So it's because it's now going to be more of a long-term game, and what do you really want? Now, when I learned about the technology and really got deep into blockchain, that's when I really liked the Bitcoin, and that's why, as you can see here, I'm running a full node and mining at the same time. So I try to support the Bitcoin network as fully as possible. So I've got the consensus. Now, the downside, there's no cost to this, but there's also no, well, I take that back. Technically there is, because as you can see, if you're using it to also supply your database to the other nodes that are participating in the network, as you can see here, it's sent 479 gigabytes. It's received 32 gigabytes. And this is for, and I have a monthly limit of 1 terabyte without having to pay more. So this really eats up my allotted per month bandwidth. So there is a cost associated with there, but as you can see, there's 88 connections in, and by default all of them have 8 connections out for redundancy from the consensus. You've got the mempool here, and then mining, to fully support the Bitcoin network. But the mining here is actually at about a $2 a day loss on average. Now long term, if the price goes up, cool, then maybe. But as far as a casual miner, this may or may not be something you want to do, because at this point you have to speculate on, is the price going to go back up, and is it worth it to you to do that? So for me, I'm going to support the Bitcoin network as long as I possibly can. I think my new threshold is, as long as I'm not losing between $100 and $150 a month. If I do, then I'm just going to have to, cut it altogether. So, and admittedly, it's not as exciting when you're in a bear market, because you can't do as much as you used to. And it was fun just being able to buy things direct with Bitcoin, and be able to backfill whatever I purchase, within a week or two at most. But now it's basically I can't save after electricity. So just take that into consideration if you're just now starting getting into mining. Know that it's going to be more of a long-term game, and you have to use your own judgment as far as if that's a risk you want to take. And I'm not a risk taker, so and like I say, this went far longer than I thought it ever would. I had always planned on, or my strategy has always been, if Bitcoin goes to zero tomorrow, that I won't be out any money. So now, if I want to stick with that, I'm going to essentially have to turn everything off. But I think I'm going to finish out the year as long as it doesn't get too expensive, and go from there. And I'll probably run the full node no matter what. I might have to stop the mining for a while. But yeah, so unfortunately it's not as exciting, like I say, for all the new people, and there's a lot of scams out there you got to be cautious of. But overall, I think Bitcoin, I was thinking of changing that audible sound to that growl from Silicon Valley episode, where each time the mining was not profitable, it blasts you. If you saw that episode, you know what I'm talking about. But at any rate, so I just wanted to kind of do a quick year-end follow-up, and technically the strategy has lasted a full year, because I started in I started in May of 2017. So from May to May and up to the last few months, it's been 100% profitable. So this past year has been a good run, and who knows, there could be, more runs in the future, but it's definitely not something that you're going to be making a net value, at least not very much right now. So, but if you feel like it can go back up again, then maybe this is something you want to do. Or if you like the technology, like I ended up really enjoying the technology in depth, and like I say, that's why I like supporting the network. So but use your own judgment, and we'll see what happens this time next year. So if you have any questions, let me know, and as always, thanks for watching, and I will see you guys in the next video.